Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video for April 22nd, 2025. What's this about? Well, I think it's a bounce from an oversold condition, but I wanted to go over the sentiment cycle so you sort of get an idea of what we're talking about. So what we're talking about in here is after a big sell-off, you get that consolidation. Here's your first big sell-off. Then you get the panic low, and you get the nice bear squeeze like we've had, and then you get sort of a drift. And then you have the discouragement and go down for months. That's where I think we are now. So just take this, and now what I'm going to do is take this right here. And as you see, we had the rally, where everybody buys a dip. You get the first sell-off, the panic sell-off, and now I think we're going to drift. Now, I use the MACD a lot. And what I've seen with historically over the last 100 years, the weekly S&P gets oversold. That drift after the panic sell-off goes on until that gets back to the zero line, and then you go to new lows. That's what I think you'll get this time. So that means you could go up for a couple of weeks, no doubt about it, or a month. And I want to show you why I think that can happen. And like I said, this is just, I know there's a lot of news going on, no doubt about it. But I want to show you at least cycles, and I'll show you what I'm looking at in cycles. Now, keep in mind when I show you cycles, this is not moon cycles. It's not any kind of magical cycle. All this is taking that companies can't buy back stock 5 weeks prior to earnings, but it's not a can't. It's a voluntarily lack of buybacks. But the thing is, what that means is when you're in the buyback blackout, you can't prop up your stock. But it doesn't mean you have to go down. What it means is bearish news like tariffs, like bear flags are more likely to work. On the other hand, when companies can buy back stock, they're more like Teflon. So I thought I'd show you what we're talking about. We're going to go into cycles here, and I'm going to take when the preponderance of stocks can buy back stock. So you start with about April 11th is JP Morgan. So that's in a buyback blackout till April 11th. Then you have around May 1st. It's a little different all the time, but around May 1st is Apple. So you figure in between to split the difference, like late April is when most of the companies can buy back stock. So go into this and put cycles in here. I'll show you. So we're going to take a cycle, and all we're doing is we're going to take November right here, right in October, and we're going to put a cycle. Then we're going to go over here, and we're going to go to the other one right here. So that's when Apple right here when they report. Then you go into here in April. See that? So we're going to take this then. I'm going to make it nice and big for you. I'm going to make this blue. And I'll make it thicker. You're going to see that this coincides a lot of times with the buyback blackouts. Late October, there was your bottom right here. See the late October right here. Then you have this one. Yep, that's when they could start buying back stock. This is close. Remember, it's really the late April. So I have it not perfect. But still, it worked pretty well. Now, why am I showing this? I'm showing this because the companies can start buying back stock. Like I said, the big area is late April. Isn't that a coincidence? That's when the cycle bottoms. That would go with what I'm talking about. With the weekly MACD, then if I'm right, and the cycle's like that. So when you're getting near the bottom of the cycle. So let's actually draw that a little better. So let's just say the bottom is right here. So right in here. So that would get this back to the zero line. And then when you go back to the S&P, you realize that would go back and coincide when the buyback blackouts start again. So if April 11th was JP Morgan, then the next one is 3 months later, July 11th. which means the middle of June is buyback blackout time. That would coincide on the right. So just keep that in the back of your mind. That's what I'm going to be watching, which means now you can drift for weeks. And that's what I expect. So have a great night. Talk to you later. I hope you find this enlightening. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.